And I mean, can you imagine in 2009 when you launched this shareholder meeting platform, you had, what, 4 virtual shareholder meetings, then 300 last year. How many in 2020? How long does this last?
Well, 1,500 this year. It has been quite an exercise to scale it that much. It's been a real change. And the great thing about these virtual meetings is it really allows for more people to participate. We see very significant increases in participation when the meeting goes virtual because it's so much easier for shareholders of all types, both institutional and individual shareholders, to tune in. So we view it as a real positive for corporate governance.
And with regards to the corporate governance and specifically the sort of heap of regulatory requirements that a lot of these companies have, as well as some of the investors and analysts as well, how do you address that using your platform?
Yeah, absolutely. So Broadridge really is, we're a 15 billion market cap global fintech, and we are focused on creating industry solutions for corporate governance, for capital markets, for wealth and asset management. And what we do is we provide the critical infrastructure that underlies a lot of the non-differentiating, critical but non-differentiating functions. And so regulatory reporting is a key part of that. And we help both capital markets firms, asset managers, and others provide a lot of the communication that they need to provide to investors so that investors have clear disclosures and can really understand the risk and return that they're taking on.
Tim, it's interesting. I mean, on one side, I really do see the benefits, clearly, just from a cost perspective. Investors being able to attend these meetings, it's cheaper. Curious, though, if you hear management companies anecdotally or some of those asset management companies that you were just speaking of, being able to perhaps dodge some of the more difficult questions because it's an online format or they don't have to face investors head-on, face-to-face. How are you thinking about this? What are companies and investors telling you?
Yeah, absolutely. There's a whole set of best practices that have been developed around this to really make sure that these meetings are even more effective than traditional meetings. And making sure to answer every question, whether it's in the moment or afterwards, is certainly one of those. And we hear it from both sides on that, but the folks that have been doing it for a while, they really believe they're getting better participation and better dialogue with shareholders because they have more shareholders there.
The other side of your business that, of course, has done particularly well, aided by the volatility that we've seen in the market, has been trading, processing the trades that you do. Yep. Will that volatility, is that currently within this current quarter that you're now working in? Do you see you benefiting longer term in that part of the business?
Yeah, so Carolyn, we provide the underlying technology platforms that are the books and records, clearance and settlement, really sort of underlying infrastructure for fixed income, for equities, for wealth management firms in North America and around the globe. We clear and settle $6 trillion a day on our technology platform. And so in this last market episode where the market went down 35%, back up 50%, there's unprecedented volatility. We were processing typically 3 times what a normal day would be. And we're really pleased with the resiliency and robustness and the fact that we just went smoothly through that. As we look forward, I think that will be high volatility will be more muted. I think that is something that will come down over time. But the trend of, which I think is a multi-decade trend, of firms being able to leverage an industry solution for some of these functions that are, just the same whether I do it or you do it, really enables them to free up investment for the things that make them unique. And I think that is that underlying trend that we're really riding that is powering our growth. We see ourselves growing again this coming year and over the next 3 years as well.
So then, Tim, how do you manage the expectations of your investors who see this bump up in revenue and in earnings that have obviously become, or at least a sort of an outgrowth of the pandemic and some of the shifts taking place? How do you manage the expectations that maybe that growth rate might not necessarily sustain itself once we get back to whatever normal is going to be?
Yeah, great question, Romaine. And you really have to separate out the sort of near-term bumps from the long-term trend. So we have grown over the past 10 years from 3,000 associates to over 12,000 associates. We're providing more and more of these industry solutions that I mentioned to you. And so, yes, we're having a near-term bump because of some of the volatility, but We expect to grow our revenues, our earnings, our cash flow this coming year. And we publish 3-year guidance. We just finished 3 years in June, and we're a June company. And during that time, over the 3 years, we grew our earnings at a compound rate of 17%. We have our next Investor Day in December. We'll talk about our next 3-year targets, but we expect to have really good, steady, high single-digit revenue and low double-digit earnings growth for a long time to come based on these mega trends.